An important part in accounting is learning how to properly classify an account. We ultimately want all of our accounts to fall into one of these 5 categories: asset, liability, owner's equity, revenue, or expense. Let's briefly cover what each of these entail and give some examples so that you have this down. An asset is something that you own, you've purchased it, and it's going to provide a future economic benefit. Something that I can think of offhand is when you buy a house. Not renting a house, but whenever you actually purchase a house, that's going to be considered an asset. Another example could be a cash account. You have cash in the bank, or you might have cash in your pocket. That's an asset to you. Can you think of any other assets?
Computer.
Computer. We own computers these days. Any other ones?
Automobile.
A car. Nice.
Gasoline.
Gasoline is a good guess, but that actually is going to be classified as an expense. Gas that we purchase is going to be consumed, so that's not going to be providing a future economic benefit to us at that time. Let's cover liabilities. Liabilities are debt that we have. When we owe someone else money, we're going to have liability. An example of this would be any note that you have with the bank. I'm going to put banknote to be generic, but it could entail a mortgage note, a car note, possibly a computer loan that you might have, any type of loan that you have where you owe someone else money. Another example would be something in accounting that we call accounts payable. I'm going to abbreviate. Accounts payable, an easy way to remember that that's a liability. Payable tells you that you owe money to someone else. If we were to be receiving money in the future, it would be called accounts receivable, and that's classified as an asset. A receivable says you're going to receive money, that's an asset. A payable says you're going to pay money to somebody else, that's going to be considered a liability. An equity account is fairly easy to remember if we recall the basic accounting equation, which is assets equals liabilities plus owner's equity. Using our college algebra, we can just swap that around to say owner's equity equals assets minus our liabilities, and I'm going to abbreviate. So this means if we sold all of our assets and pooled all of that money together and paid off all of our debts, our equity would be exactly what we have left over. Sometimes in accounting we use accounts called a capital account, and it might be denoted by someone's name. Other items that we could use could be called retained earnings if we are in a corporation. I'm going to erase capital. Let's move on to revenue. Revenue would be things that we sell when we're in the business. Let's pretend like we own a grocery store, and anytime that we sell groceries to a customer, that's going to be considered a sale. Sometimes we even go further and call it sales revenue. If I'm a CPA and you bring your taxes to me and you ask for me to prepare your tax forms, I would consider that service revenue. I'm providing you a service, you are paying me for that service, and that's what I'm in business to do. Now let's say that I am just a regular civilian, I work at a corporate job during the day, and I sell my house. Is that what I'm in business to do?
No.
Nope. So that's not going to be considered a revenue of this kind. That could be considered income depending on years and all the other kinds of tax laws. We won't get into that. The last account that we're going to talk about are the expenses that we have. Expenses are associated with the business that we're in. Okay? So let's go back to the grocery store and discuss what could be an expense for a grocery store.
Gasoline.
Gas that they use in their cars?
Fruit. Food.
Nope. That would not be considered an expense, because That's not something that they do in order to keep running their business. Let me give some other examples. There you go. Utility bills. Utility bills, anything that they have to do, they might have to pay some administrative personnel. There could be, you know,
Tools.
paper,
Rent for the building?
rent if they don't own it.
Tools. Tools to build.
So those are some good examples of how we can classify these particular accounts.